the great Australian dream, owning a home. For generations, Aussies have held onto a shared aspiration, owning a home. It's a dream passed down through the years, symbolizing stability and success. It's the embodiment of the Aussie dream, a place to call your own, a backyard Barbie paradise, a secure foundation for your future. A home is more than just bricks and mortar, it's where memories are made. But the reality is, for most of us, buying a home requires a little help. Navigating the property market can be daunting without the right support. That's where mortgages come in. They provide the financial assistance needed to turn the dream into reality. A mortgage is essentially a loan that you take out to buy a property. It allows you to spread the cost over many years. It's a big financial commitment, often the biggest one you'll ever make. It requires careful planning and consideration, but it can also be a pathway to achieving that dream of homeownership. The journey may be challenging, but the rewards are worth it. Imagine finally holding the keys to your own place, the excitement of decorating it just the way you like, the sense of pride that comes with calling it yours. It's a milestone worth celebrating. That's the power of the mortgage. It turns dreams into tangible realities. But before you jump headfirst into the world of home loans, it's crucial to understand how they work, the different types available, and the factors that influence their cost. Let's break it down. Knowledge is key to making informed decisions. Mortgages 101, your home loan explained. Now let's talk about mortgages in plain English. Understanding mortgages can seem daunting, but it doesn't have to be. A mortgage is simply a loan that you get from a bank or lender to buy a property. It's a financial tool that helps you own a home without paying the full price up front. You borrow a big chunk of money, we're talking hundreds of thousands, maybe even millions, and you pay it back over a long period, usually 25 to 30 years. This long-term repayment plan makes homeownership more accessible. Think of it like this. The bank buys your dream home for you and you slowly pay them back with interest until it's all yours. It's a partnership where the bank helps you achieve your homeownership dreams. There are a bunch of different types of mortgages out there, but the two most common are variable rate mortgages and fixed rate mortgages. Variable rate mortgages have interest rates that can go up or down over the life of the loan. These fluctuations depend on the market conditions and can affect your monthly repayments. They can be a bit of a gamble, as your repayments could increase if interest rates rise. However, they might also decrease if rates go down, offering potential savings. Fixed-rate mortgages, on the other hand, have an interest rate that stays the same for a set period, usually 1 to 5 years. This stability can be very reassuring. It's like locking in a price for your repayments, giving you certainty for that initial period. You know exactly what you'll be paying each month, which helps with budgeting. Choosing the right type of mortgage depends on your individual circumstances, your risk tolerance, and your predictions about future interest rate movements. It's important to consider your financial situation and long-term goals when making this decision. Navigating the mortgage maze. From application to approval, getting a mortgage can feel like navigating a maze, but it doesn't have to be overwhelming. With the right guidance and preparation, you can make the process much smoother. The first step is to get your finances in order. This means gathering all necessary documents and understanding your financial situation. Lenders want to see that you're a safe bet, so having a good credit history, stable income, and a decent deposit is crucial. A strong financial profile can significantly improve your chances of approval. Once you've got your financial ducks in a row, you can start shopping around for the best mortgage deals. It's important to research and compare different options. Don't be afraid to compare offers from different lenders to find the one that suits you best. Each lender may offer different terms and rates, so take your time. This is where a mortgage broker can come in handy. They can help you compare loans and find the right one for your situation. Brokers have access to a wide range of products and can offer valuable advice. Next comes the application process. This step involves filling out detailed forms and providing all necessary documentation. Be prepared to provide a mountain of paperwork, including proof of income, bank statements, and details about your expenses. Organization is key here. The lender will then assess your application and decide whether to approve your loan. This can be a nerve-wracking time, but patience is essential. If your application gets the green light, congratulations. You're well on your way to owning your own home. This is a significant milestone. But before you start popping champagne corks, you'll need to sign a bunch of legal documents and pay some fees. This final step is crucial to finalize your mortgage. It's important to read everything carefully and get legal advice if you're unsure about anything. Understanding the terms and conditions is vital to avoid future issues. The interest rate roller coaster. What drives your mortgage costs? One of the most significant factors influencing your mortgage costs is the interest rate. It's the price you pay for borrowing money, and it can have a huge impact on your repayments. But what exactly drives these interest rates? Several factors are at play, but one of the most critical is the official cash rate set by the Reserve Bank of Australia, the RBA. Think of the RBA as the big kahuna of interest rates. When the RBA lifts rates, lenders typically follow suit, and your mortgage repayments could increase. Other factors influencing mortgage rates include competition between lenders, the overall health of the economy, and even global economic conditions. It's a complex interplay of forces, and it can be challenging to predict how interest rates will move.